Okay, so for decades, there's been this one name in finance that gets whispered about with, well, a mix of total awe and complete mystery: the Medallion Fund. It's like a black box, right? A ghost. We just know it's the single most successful hedge fund in history. But the real question is, how did it actually work? All right, let's get into it and try to crack the code on what might be the greatest money-making machine the world has ever seen.
To really get your head around the scale of this, you gotta start with one number: 66%. That was Medallion's average annual return, and that's before they took their fees, for over 30 years straight. You know, in the finance world, a number like that isn't just exceptional. It's basically considered impossible. It just doesn't happen. And to really grasp that, just look at this chart. Okay, say you invested $100 in the S&P 500 back in 1988. 30 years later, you'd have about $1,000. Hey, not bad, right? A respectable return. But what if you put that same $100 into the Medallion Fund? Well, it would have turned into over $2 million. That's not just beating the market. That's playing a completely different sport on a different planet.
So, yeah, that brings us to the big question, right? This whole operation wasn't run by your typical Wall Street hotshots in slick suits. Nope, it was run by a mathematician, a former codebreaker no less, and a whole team of scientists. So how on earth did a bunch of academics pull this off?
Okay, let's start by digging into the absolute dominance of this 66% return machine. Seriously, the numbers are so wild they're almost hard to believe.
Get this, the fund pulled in over $100 billion in trading gains. And even after they charged these massive fees, I'm talking a 5% management fee plus up to 44% of the profits, which is just unheard of. It still averaged 39% a year for its investors. But the resilience, that's what's truly stunning. Think about the 2008 financial crisis, when the entire global economy was just collapsing. Medallion? Oh, they gained over 98%. It was a machine that just didn't seem to lose.
So to understand the machine, you really have to understand the guy who built it. And he was not your typical Wall Street titan, not even close. He was a code breaker.
The journey of Jim Simons is absolutely key here. He starts out as a brilliant mathematician at MIT. Then he goes to the NSA, literally cracking codes for the government during the Cold War. Talk about honing your pattern recognition skills. After a huge career in academia, he finally starts Renaissance Technologies in 1982. The big takeaway here is that his entire background, his whole superpower, was finding hidden signals in noisy, complex systems. It had nothing to do with finance.
And this quote from Simons just says it all. We don't hire people from Wall Street. We hire people who have done good science. I mean, that philosophy was the core of everything. He truly believed the best people to solve the market weren't MBAs staring at balance sheets, but scientists, physicists, mathematicians, people who knew how to solve really hard problems. He basically built a team of non-finance geniuses to crack the market's code.
So what was this revolutionary approach these guys were using? It's called quantitative investing, or quant trading for short. And believe me, it completely changed the game.
Basically, quant investing treats the market less like a story about companies and economies and more like a giant data problem that needs to be solved. You use these incredibly sophisticated math models and algorithms to find statistical patterns, and then you have the computers make the trades automatically. The goal? To take human emotion, gut feelings, panic, greed, completely out of the equation.
And this really shows you the two completely different worlds of investing. You've got your traditional investors, think Warren Buffett, right? They're looking for value. Using their analysis, their intuition, they rely on judgment, on experience. Then you have the quants. They couldn't care less about a company's story. They're just looking for repeatable statistical patterns in the data. Their edge is pure speed and the cold, hard logic of their computer systems.
So what does one of these strategies even look like in practice? Well, one of the foundational ones is called mean reversion. The idea is pretty simple, actually. Think of a price like it's attached to a rubber band. It might stretch way up or get pulled way down, but eventually it tends to snap back to its average. So the model sees a stock price shoot way out of its normal range and places a bet that it's going to drift back to the middle. It's a simple concept, but when you automate it and do it thousands of times a day, it becomes incredibly powerful.
But look, a strategy like mean reversion, that alone isn't going to get you to 66% a year, not even close. The real magic of Medallion, the secret sauce, came from a combination of 4 key ingredients that pretty much no one else could ever replicate.
Ingredient number 1, just a massive, insatiable hunger for data. We're talking everything. Stock prices going back centuries, weather patterns, news articles, you name it. They were collecting terabytes of this stuff daily. The goal was simple: feed the machine more information than anyone else on the planet, and let it find the hidden patterns, the tiny correlations no human could ever spot.
And as Robert Mercer, who is a former co-CEO and a key figure there, famously said, "There's no data like more data." That just sums up their entire philosophy. They truly believe that if you just had enough data, any pattern, no matter how faint or subtle, could eventually be found and exploited for profit.
All right, ingredient number 2, the team. This wasn't just any team. It was a brain trust like no other. Like we said, Simons deliberately hired outsiders, PhDs in math, physics, cryptography, basically anyone but finance guys. He created this really collaborative, almost academic environment where the best idea won, no matter who it came from. Everyone is focused on one thing: making the central trading system better.
Okay, ingredient number 3. Now this is where things get really, really interesting. See, their individual trades, they weren't home runs, not at all. In fact, their statistical edge on any given trade was tiny. So how did they make so much money? By using high leverage and massive diversification to amplify those teeny tiny wins into gigantic returns.
Think of it like a casino. The house only has a tiny edge in roulette, right? Barely over 50%. That's kind of what Medallion had. On its own, that tiny edge is almost useless. But what does a casino do? It gets thousands of people to play over and over. That's what Medallion did with trades, millions of them. And then, and this is the crazy part, they used massive leverage, borrowing money to make their bets up to 20 times bigger. It was like turning a 5-cent profit into $1 over and over and over. And diversification across all those trades was the safety net that kept them from blowing up.
And that brings us to the final ingredient. And honestly, this might be the hardest one to replicate. It was their absolute 100% unwavering trust in the system. There was just zero room for human emotion.
They had these core rules for the machine. First, find statistical anomalies, patterns that just shouldn't exist randomly. Second, and this is huge, don't ask why. The reason for the pattern didn't matter. All that mattered was that it was real and it repeated. Third, trust the model. You never, ever override the computer because of a gut feeling. And finally, trade all the time. High turnover is how the casino makes its money. This was the complete opposite of how pretty much every other person on Wall Street was trained to think.
So, okay, you've built the perfect money-making machine. Now what? Well, you have to protect it. And protecting this thing was just as important as building it in the first place, which led to this really intense culture of secrecy.
I mean, employees signed these ironclad non-disclosure agreements. The algorithms, the source code, that was the crown jewels, and it was protected at all costs. And get this, since 1993, the Medallion Fund has been completely closed to outside investors. It's only for employees. This wasn't just them being exclusive. It was a brilliant strategic move to stop competitors from ever figuring out how they did it.
So when you look back, Medallion didn't just make an obscene amount of money. It actually launched a revolution, the quant revolution, and it completely reshaped modern finance, leaving behind this incredible legacy.
Because what Medallion's success really proved was that the market could be treated like a code, and Jim Simons and his team of scientists, they were the first ones to really truly crack it. But it leaves us with this really fascinating question, one that traders are still grappling with today. Is the market a game that can actually be solved and won for good? Or, as old patterns get discovered by everyone and fade away, is there always a new, even more complex puzzle just waiting to be cracked?